So with that, we'll go ahead and see how Hugh's doing out there. Hugh, do you have any comments from 35,000 feet on TEVA or?
No, I mean, I like the company. The stock has been a little bit depressed recently.
There's been quite a pullback, yeah.
Yeah, which is interesting because if you look at what's happened in the marketplace, King was recently acquired by Pfizer, and there's a lot of interest in big pharma in acquiring generic companies right now. And TEVA, by the way, has the advantage too that it has a big biotech arm.
Mm-hmm.
So if and when there is a mechanism for approving biotech generics, which is on the horizon, it will happen at some point, TEVA is well positioned in that area.
Cool.
Yes, thanks for mentioning that, Hugh. I didn't mention the biosimilars or the biotech area, which is another area they're looking for future growth in. Yeah,
and I think EMA, which is the European equivalent of the FDA, has a mechanism in place for biosimilars. TEVA, and there's a need for it in national healthcare systems. They're looking for people to produce biosimilars. So, yeah, it's only a matter of time.
All right, so Hugh, I've got your slide showing your Beefeater hat and your opening slide on Microsoft up. For those of you that weren't here for the opening session, the pre-session, Hugh is operating without being able to actually see the presentation. He's operating from on the road in San Francisco tonight, so he's flying blind, but just take it from there, and I'll do my best to keep up with you on the slides.
I mean, the reason I wasn't around last week was because I was in Switzerland at a job interview, and, you know, I took the job, so I have a brand new laptop, and I have a meeting tomorrow. Well, thanks. The trouble is there's a lot of security on this laptop, and I knew that, but I didn't realize how intense it was. And a lot of the files that you have to plow through to figure out how to get around the firewall are written in Swiss German. So it shut me out. The laptop shut me out of the web completely because I thought, oh, well, it's not going to let me in the GoToMeeting. I'll go into Gmail and rescue the files that I sent to you, Mark, early today. But now I can't even get on that one. So I am literally flying blind. But I think we're a bit pushed for time, are we?
Oh, not too bad. Just go ahead and do what you need to do.
Well, the thing is that Microsoft is a company that I have owned on and off for a while. I mean, I owned a little bit of it in the 90s. I can't believe I did. I've always kind of regretted it because I thought I bought it too high, and then it kept going up. And then, of course, Microsoft decided to pay a dividend, and after that, it has been going sideways ever since. The company still generates lots of cash. We all know what it does. It started off making operating systems and eventually got into software, and now it seems to be involved in everything to do with computers, from server systems to games and consoles and everything. But it's a very, very interesting company, and I've gotten really interested in it recently because I don't really understand why the share price is as depressed as it is. The only thing I can conclude is that the average PE ratio for the company seems to decline steadily almost every year. It's almost like there are forces out there not letting the price of Microsoft increase. So I'm kind of very interested in it. I'm interested in it because it carries an amazing amount of cash in its balance sheet, and it always has. I believe now it has $40 billion in cash and about 10 or 11 billion in receivables. That's a huge chunk of change, particularly when you consider that there's only about 8 billion shares outstanding. And it has been buying back shares aggressively. When I looked at a recent 10Q, it said that it bought back, I think, $13 billion worth of shares by the end of the 2010 fiscal year. And it authorized $40 billion in total, and there's about $15 billion left. And so it will continue to buy back. I've always been a little bit cynical about Microsoft because I said, and I think it's on the slide that you might be looking at now, that it never has really invented anything at all except Visual Basic. I mean, they went out and bought DOS and then revamped it for IBM. They learned how to do, I think, word processing when they worked with Apple on the Macintosh. And Microsoft has been a serial acquirer for many, many years. In fact, if you go on the Microsoft website and click through to investor relations, you come to a page where it tells you what the company has been buying recently. I haven't purchased anything in 2011, but good heavens, you can go way back to 1985, and it has just been buying things every single year, I think, swinging for the fences in the hope that things will work. I'm not going to be able to go with the slides, Mark, because I can't see them, but I do remember what I put on there, and what I did was I got a recent presentation from Microsoft and incorporated some of the slides where it shows where it gets its revenues from and where it thinks its growth is going to be from in the future. So I just wanted to just talk about the different areas where Microsoft gets its money from, if you will, where it gets its revenues from. And because it's kind of important, we're all kind of familiar with the Windows division, the software that operates on PCs. That has not been doing well. In fact, the revenues of that last year dropped by about 30%. And Microsoft gives various reasons for that. I think the launch of Windows 7 was not that successful. There's presumably a brand new version of Windows coming. I don't know how many of you have used the recent version of Windows. I don't like it at all. I'm hoping that maybe they just misjudged the market with this thing. People didn't like it, and perhaps the new one that comes out would be better. I liked XP fine when I got that, but I just don't like Windows 7. But that has hurt the company, no question about that, in the Windows division. But where it has done quite well as the economy starts to pick up are in areas like what it describes as servers and tools. Well, the Windows division dropped by about 30%. Here, revenues are growing by 10 to 12%, and bottom line is growing much stronger than that in this area by about 20%. And this is an area that will continue to grow. The enterprise software and the various platforms will continue to grow as the economy continues its recovery. Its online services have been doing well. The search engine Bing certainly doesn't have a huge share of the market, but is respectable. Has a nice deal with Yahoo, but I'm not too sure how well that is working out. I've been reading a lot of weird press on that one recently. But its revenues are growing there at a nice clip of about 20% a year. Good sign. Doesn't really offset what's happening in the Windows division, but it's good that it's at least getting some traction in this online market, in the very aggressive area of search and related activities for generating ad revenue. It's generating about only $200 million a year. It's generating about $1 billion a year in online ad revenue, which is, it's nice. The company has about $80 billion a year total. It's not a huge amount of money, but it's a growing amount of money. It's growing by 15 to 16% annually. The business division is growing very rapidly, 24%, not as rapidly as things were happening in the 90s, but it's growing nicely as the economy continues. And the big news for Microsoft is the entertainment division. And around the Christmas holidays, we also wrote those nice ads that Microsoft ran of its Kinect product, which looked pretty nice. I don't have the new Xbox 360, but I'm wowed by what it can do. And people that own it are pretty impressed. There you have revenues growing by 50 to 60% and income growing by 75%. I don't know if that's an Apple-type moment, a platform that can push it to dominate a market, but certainly the Xbox 360 has done something really wonderful for the company. Can we skip forward, Mark, to where I talk about the SSG?
Yep, I'm on it right now. You're looking at the visual analysis.
Perfect. So as you can see, Microsoft has nice, steady sales growth. I mean, it's not a perfect train track, perfect up, straight, and parallel type company, but it's a respectable company, and it has weathered storms pretty nicely. It's growing at a clip of about 11% a year. I projected 10% going forward, which is closer to, I think, the number I got from Manifest Investing and a few other sources. I throttled back on its pre-tax profit by a few percentage points, increased the tax a bit. Microsoft benefits from some overseas tax shelters, a term I don't really like, but the trouble with these overseas tax shelters is that it can maroon cash in foreign shores that can't be brought back into the U.S. I'm still digging into Microsoft's numbers to see if it has the same kind of issue that Cisco has. It has some issue, but not, I don't think, as bad. And as I said earlier, Microsoft has been on a binge of buying back shares. It will buy another 15 billion back, I presume, this year. But I cut the number of shares outstanding by about 400 to 500 million, about half a billion, because it's buying them back that aggressively. I don't imagine it'll become a private company, but who knows? But all told, I mean, it gives me a nice revenue growth rate for Microsoft and a bottom line and earnings growth rate for Microsoft and an earnings target that is slightly actually below what the analyst consensus projection is. But still, when I look at part 2 of the SSG, it looks good to me. Nice return on equity, nice pre-tax profit on sales. The PE ratios seem respectable, but I have to be cognizant of the fact that Microsoft seems to get beaten up every year as people shrink those PE ratios more and more. But even being super conservative with this company and throttling back in all the numbers, I still ended up with what I would call an outlandish upside down ratio of 7 to 1, but it puts it in the buy zone. And by all respects and all measures, this company looks pretty respectable to me. It's a company that I have bought recently and will continue to buy it on dips. It pays a pretty respectable dividend as well, 16 cents a quarter, 64 cents a year. Not bad, not super. You're not going to retire on that unless you have lots and lots of shares. But it's reasonably respectable, and dividends are the new thing. Lots of companies that once weren't dividend payers, and Microsoft, of course, used to be one of those, are now giving cash back to their shareholders. Microsoft, as I said, has a lot of it. It has about 40 billion in pure cash, and if you count the receivables, which it's looking a pretty healthy company. So Microsoft is my pick for this week.
Okay, well, thanks. I'm actually displaying the fundamental forecasts for the company, and I can use this as an opportunity to make a point that it's also kind of fun to watch the Apple lovers and the Microsoft haters of the world. They never seem to get tired, and I just want to draw everybody's attention to this number down here, this 89.7% on the caps, the Motley Fool caps All-Stars. When you see 90% down there, basically 90% of the people who have been successful stock pickers expect Microsoft to outperform the market. That 90% is actually an average threshold. That's kind of like the midpoint of the market. I think 9 to 1 in general, where 9 times is more likely to talk about a successful stock pick than an unsuccessful stock pick, or buying versus selling. And it's kind of interesting that the market really is kind of lukewarm to this company. It's something to consider as you might have to wait a while. Who knows? Well, thanks, Hugh.